What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is July 19th of 2020. Well, folks, I hope you all are having a fantastic day wherever you are, and in today's video, I want to spend some time jumping back into history and taking a look at the previous altcoin cycles and just trying to get an understanding of what we can expect this time around for the kind of multiples and returns for cryptocurrencies as we go into the next bull market, and also how you can position yourself strategically as many different coins take different paths during these cycles. So without further ado, we're going to go ahead and jump straight into it. So taking a look across the board for the market here, we can obviously see over the last 24 hours that the vast majority of cryptocurrencies aren't making any moves, but if you're in the right place here, again, if you're focusing on DeFi or enterprise blockchain, you can usually be positioned quite well. One of our plays, Kava, here is up nearly 10%. Bancor, another DeFi play. Aave, one of the key plays in the DeFi space as well at 14%. And if you just take a look at the broad index for DeFi tokens, you don't need me to tell you this, guys. This trend has been going on for the last few weeks if you've been paying attention to what's going on in crypto markets. But if you're just getting in tune, it's no worry. You're not too late. I think we're at the beginning of this cycle. And I wanted to go ahead and talk a little bit about history and talking about, multiples. As a macro trader, I always look for markets that can multiply time and time again over in valuation. If there's a period of time over a year or two where I can double my money, triple my money, exorbitant amounts of returns on my trades and investments, then I'm going to focus on those markets, right? Even if they're a little bit more high risk, I can position myself properly, I can make sure to hedge myself in other markets, etc. But the key thing we have to focus on here, I think, is first to take a look at history. The first question here is, what have we seen cryptos do in the past, in the previous bull market back in early 2017, in the initial phases of it, as we had two altcoin cycles in total. So we want to look at the first cycle, I think, above all, and analyze each individual currency and see what we can take away from it. So first off, taking a look at Ethereum here, this is obviously now the second largest cryptocurrency. Ethereum really came in hard in the first phase of the overall bull market. Again, if you want to take the bottom back here at a market cap of 565 million, or over here at around 635 million, right, no matter what, I generally like to rough out that Ethereum was down at an even range of around $8 per coin. And at the peak of the first cycle here, we went all the way up to practically around $400 for Ethereum. To simplify that, that's a 50x, okay? So if you can get a 50x return in a matter of not even a full year, really just about 6.5 months going into the mid part of June here in 2017, that's fantastic. Now, that's not always going to be easy to spot, and you have to be on the cutting edge, be doing research, and you have to stay tuned to the markets. And that's why I'm constantly doing videos here on the channel, guys. It's just constantly, looking at what plays here are showing those kind of signs where, again, it's very common in crypto. A lot of people would react this way where they would say, for example, ETH has gone from $8 to $42 and it's holding sideways. It's going to crash any moment. But the moment you see these kind of multiple returns, right, it's already made multiples as is, and you see that kind of sideways price action, that's what you want to focus on. Those are the plays that have the opportunity to continue going higher and higher. And price is telling you that. When you have kind of sideways price action like Ethereum had here from March all the way over to the end of April, that's a really good sign because it showcases that bulls are constantly buying in to any sell side pressure and neutralizing the price, right? It's keeping it at a similar range to where it was the previous day, the previous week, and the previous month. Let's take a look at XRP here. XRP was kind of a kind of early runner here compared to all the other plays here, as many people I think at the time were interested in XRP as a token because it was a very cheap token. So again, you have this inherent bias by a lot of newcomers and traders and speculators that something that's cheaper is usually better to buy, and that's not always the case. But in the case of XRP, because of that misunderstanding, it led to an earlier return than others. But again, same kind of price action here. Sideways price action where the vast majority of the gains or the multiples have been held, and eventually a continuation of the rally. Now, again, you can try to pick the exact bottom here on when, for example, XRP set in a low and went into a high, but it did well over an 80x return, okay? So again, another example here of how we can see these ridiculous returns for some of these cycles. And again, it's a matter of whether or not you materialize those returns towards the peak of the cycle. And I'm not here to say that we have to call tops or anything. And in fact, I'd say it's probably better along the way if you have like an exponential target like that, like of a 20, 30, 40x, to set basically limit orders or to start raising your stops as you go along these multiples and start setting in a tighter stop in that case as you get towards more exponential movements. And last, actually I have two more I want to showcase here. We've got Litecoin as well. Litecoin has very unique price action comparative to what we saw with ETH and XRP. Definitely still parabolic or exponential movements, but at the same time, going from something around here, around like, $4 roughly take, again, we have these kind of $3.80 kind of bottom ranges here. But I like to just think about it in big evens, like $4 going all the way up here. And I think the absolute peak here, it's not showing properly on the chart. I think it went up exactly to about 100 if I remember correctly. So going from $4, 100, do the math, is 25x. So really great returns. This one played out all the way into September. It was a slower, more steady cycle in regards to its USD chart. But we can see here 25, 40, 80x. I mean, these are huge, 50x, apologies in the case. So again, we have a lot of different plays here that are doing really, really phenomenal price action. This was back in 2017. And the last one here is NEO. NEO was definitely a bit of a, I'm sorry, I actually don't have the chart zoomed in properly. Let me go ahead and focus on the right portion here. There we go. Apologies, I had it up on the other ones. But taking a look at NEO here, we set in a peak around $50 per NEO. The bottom down here was 13 cents, right? Fractions of a dollar. So again, if you're a front runner to a lot of these things and you focus in on these cycles early on and you're doing your due diligence and you focus on things like DeFi and a lot of these new trends, you can spot a lot of great plays, right? But there's a few things to bear in mind. The cycle multiples, so the amount of times that valuation increase over and over again, is likely going to be much smaller this time around. The second thing as well is that there are going to be less winners in this market compared to the previous one. It's likely that this time around, as you have larger valuations, and again in this case, you're not only dealing with a lower chance of multiplying those valuations at higher levels, but outside of that as well, there's going to be very select few players that probably shine, similar to plays like Ethereum or Litecoin, that really came to the occasion and started to dominate the market. So those are the key things we want to focus on, having lower expectations for multiples, and then also, again, as well, keeping in mind that it's going to be very few key plays who went out and actually have these kind of crazy run-ups that go into billions of dollars of valuation. Now, the last thing I wanted to talk about, as I hinted to earlier, is that if we take a look at all these different charts here, NEO, Litecoin, taking a look at XRP and Ethereum, all of them inevitably did good, but here's the catch. They don't always follow the exact same trend. Now, of course, generally speaking, if you took where they started in the beginning of January in 2017 and June of 2017 or July of 2017, yeah, they're all going to probably be way higher. But notice how they moved and they had parabolic cycles at different periods of time. So how can we go about actually effectively positioning ourselves where maybe we can not only ride these crazy multiple waves where we get to see our investment grow to a much larger amount, but outside of that as well, we can also focus on positioning ourselves between the altcoins. And that's something I constantly talk about. So there's two ways you can do this. You can do it the very traditional way where people are constantly looking at where an altcoin is to Bitcoin and seeing, how is it maybe performed against history, right? Generally, what kind of returns does the altcoin see against Bitcoin before it starts to crash in this case or see a pullback? We can start by taking a look at that. We can also just see by taking a look at indicators like our SMS indicator if something is starting to flash warning signs of a pullback, things like that, right? But this is very surface level. And I think most traders out there and average kind of Joes and stuff in the space are going to be looking at altcoins to Bitcoin. If you want to get a bit deeper and start comparing altcoins to altcoins, that's where ratios come in. And I know many of you out there who are constant viewers of the channel have heard me talk about ratios. But again, I want to constantly hit on this point here about looking at ratios of different altcoins against one another. So I can give you one here that's a perfect example. ADA to Ethereum, right? So what we do here, in order to make sure you guys understand how to type these in, you would type in ADA BTC /ETH BTC. And the important thing to note is that you want to make sure you get the exchanges with the most price history. So in this case, I know Bittrex was one of the first to list ADA as well as Ethereum in this case. It was one of the earlier players. So an interesting thing here is that, again, a lot of people constantly debate with me, Nick, the fundamentals of, ADA or Ethereum are better than one or the other. I'm not, as a trader, really worrying about that. I believe in both projects long term. I think that both of them have a fighting chance of being something. But when I take a look at the chart here, I get a very clear picture of what I need to focus on. Right now, I can see that there is a resistance line, historically speaking. It used to also serve as support for ADA against Ethereum. So right now, ADA possibly has a chance of considering this resistance and Ethereum possibly either coming up here soon. So Ethereum's either going to make a move to the upside and start outpacing altcoins like ADA, or ADA might start pulling back a little bit of its gains, or a bit of both. And again, that's not me being bearish on ADA. I'm just saying that this is what the chart is saying is probably going to happen over the next few weeks. It's not me being biased. It's not me trying to ridicule one project or another. It's just turning to history. And again, as a trader in this case, what I can take from this is that, okay, maybe over the next few weeks, it's probably best that I position myself in ETH over ADA if I broadly want to be long altcoins. And then after it pulls back here, right, maybe we pull back to this range. Notice how back here we can see that this served as a point of resistance. We might come back down, pull down here over the next few weeks going into August, build support, and break out above it just like we did over here, right? Turning off our drawings, we broke out above the line here and continued much higher. And this is the logarithmic chart. So you can see that this made some pretty good gains afterwards comparative to Ethereum, right? So I'm not bashing ADA here. I'm just using this as a great example here of how we can turn towards ratios and can tell us what altcoins we should position ourselves in. And ignoring the BTC part, because the Bitcoin divided by Bitcoin cancels it out. So now we're getting a custom pair here of ADA to ETH. Now you could also probably look this up and see ADA to ETH, but the problem is that historically speaking, there wasn't as many Ethereum pairs, so you're not going to have this kind of price history. Okay, so it's good to do like the altcoin BTC divided by whatever secondary altcoin you want to build the ratio for. Outside of that as well, RLC, this has been a prime example of one that's really paid off for us, guys. RLC, if you take it here to the logarithmic chart, right, historically has over 200% rallies over a multitude of around 13 to 14 weeks. And in this case, right, we're looking at possibly a slightly longer cycle here, but even if we just take it down here to 14 weeks or 13 weeks here, we can see, roughly speaking, close to history here, right? We'll go ahead and draw it to the absolute top there. But again, we're on our 12th week here. This gives us another week here for the 13th week, possibly going up towards that higher 200% range, right? History has already shown that consecutively it does this. If you're looking at the standard RLC chart or the Chainlink chart, you don't get to see these kind of insights, right? But this is free. It's open to anyone to utilize. And you can build all types of custom ratios. The best thing to look for is to see if you can find trends in the charts. So anyways, that's it for the lesson today, guys, and just kind of analyzing the comparison here. The 3 takeaways from it: expect much lower multiples than before, and along with that as well, for those plays in the market that do those kind of multiples and still have crazy investment returns, expect that it's going to be a lot less than before, a lot less widespread and rampant like it was last time, as you're dealing with much larger valuations. And last but not least as well, utilize ratios, not just against Bitcoin, but also altcoins to altcoins. All right, guys. Anyways, that's it for the core part of the video. I just want to let you all know that this video is made possible and sponsored by Amaten. Now, for those of you who haven't heard about Amaten, Amaten is a peer-to-peer gift card marketplace, not only as a previous existing company in Japan that services the vast majority of the market, but they're now building out a blockchain-based solution that allows you to exchange gift cards in a peer-to-peer way utilizing smart contracts. So I highly recommend you check out the white paper, check out what they're doing, go to amaten.io to learn more. But outside of that, everyone, that's it for the video. Thank you all so much for watching. I hope you all are having a fantastic day wherever you are, and I'll see you all in the next one. Stay tuned.